Hello world, my name is Ara. I am a full stack web developer with a passion for investing. So, I say that at the beginning of every video, and I want people to know that I am not a professional investor, and there are other reasons that I have made a lot of money by owning and trading stocks. And the reason is because you absolutely do not need to be a professional investor. You need to have two things. You need to have common sense and you need to have a little bit of money. So the money thing takes a little time, and the common sense, you got to work on that if you don't have it. So what I do is I buy companies, like I said in my previous videos, is growing revenues, growing earnings, paying dividends, preferably growing dividends. Dividends isn't a must, but dividends, it's nice because it makes the management responsible, in my opinion. And you want to pick companies that are going to be around 10 years from now, hopefully as much bigger companies. So I think that's kind of like common sense. Like anyone that would invest in a company like Netflix or Amazon might be accused of paying way too much money now. But if you invest in 10 different companies like that, then you're probably going to do okay. You might overpay this year or this month, but in a 10-year time frame, companies that are just growing like crazy, they tend to do very well, and they tend to become big companies. Not that I'm recommending Amazon or Netflix. I don't own either one of those two. They very may well be overpriced. Who knows? But anyway, the companies that I have traded in the last couple weeks have made me a good amount of money. I tell everyone to buy stocks and hold them for the long term, but that's not what I do. I wish I had the discipline to do that. I seem to make these trades sometimes after just a day if a stock pops up. So I'll tell you one company I bought recently was Duluth Trading Company. I bought it for about $17.90 a share. This is a clothing company that seems to solve different little problems like plumber's crack, and they make t-shirts that are a little bit longer, maybe 3 inches longer, to cover your butt. And they make all different types of clothing. They make flannel shirts with extra area in the armpits. That way your shirt doesn't become untucked when you raise your arms above your head. Stuff like that. So Duluth Trading Company, symbol DLTH. It is a great company that I have been looking at once in a while over the last few months. And I always thought this company was way too expensive. But now it is in the teens. So I bought 900 shares, which is a lot for me. And the very next day, it popped up from $17.90 to $19.01. So I made a quick $1,000. Instead of actually cashing out all my shares, I decided to sell 400 of them and keep 500 of them, because I thought that was a little bit too high of a price for the day, and there was no news, no reason why the stock was going up so quick. So while I was happy that it went up so quick, I decided to take the profit on 400 of the shares and keep 500. In similar fashion, I did something similar to that with T. Rowe Price. A lot of the money that I don't have invested, I like to keep it invested in any stock that I just like for the long term, and T. Rowe Price fits the bill. TROW. So when T. Rowe was about $74, $75 a share, I loaded up, not because I was in love with the company, just because I had extra cash laying around that was not invested in other things. So I bought about $35,000, $36,000 of T. Rowe Price. I already had a few shares, just as a place to store my money, and it actually popped up to $80 a couple days ago. I sold 244 shares, which was about half my position, on Thursday, and made about $1,500. And the other shares that I owned, they were up nicely as well, but I decided to keep 250 shares for the long term. This is also a stock that I own in my daughter's 529. The news for T. Rowe Price, which is similar to Fidelity or Vanguard, was that they now have more money that they are managing. It's close to $1 trillion now. And just common sense would tell you if a company that runs index funds and mutual funds is managing more money, now they are going to be making more money in the future. The fear for them is that more people are moving their money from mutual funds to index funds, which have lower fees. Therefore, T. Rowe Price won't be making as much money in the future. But I think that fear is overblown. T. Rowe Price has raised its dividends for 25 years straight now, and I think they'll be fine. Their earnings and revenues are growing. Let's see, another company that I traded recently was Facebook. If you've been watching my videos, you know how much I love Facebook. They're around 39 times earnings. It changes because when companies have a very high PE ratio, it's very high. It's very easy to go from like 36 to 40 to 36. So anyway, Facebook is a great company. They're growing revenues and earnings at a ridiculously fast pace, in the 50% ballpark, 50% per year. Meaning if they make $1 billion a year ago, this year they're expected to make $1.5 billion. That's an incredible growth rate. So this company, I bought a couple of options when Facebook was around 150, and I bought one more when Facebook was around 148. So in total, I owned the equivalent of about 300 shares. And I decided to sell one of my options when Facebook popped up to 158, and I still own the other two. So that one option, I spent $2,500 on the one, and I sold it for a little bit less than $3,100. So I was very happy to make $500 so quickly, although that was not my plan. I would have preferred to make money very slowly over the next 12 months. But if Facebook ever does drop down below $150 a share again, I will be loading up and buying probably 1,000 more shares. And I'll probably use options to do that. That way I don't have to actually use cash. That much cash anyway. I'll probably buy 10 options. So that's Facebook. There's been a few companies that I've been very involved with. So I told you I sold some shares of Duluth Trading Company. I sold some shares of T. Rowe Price. I sold one Facebook option. So what I did with the money, because I like to keep the money invested, is I bought about $10,000 worth of Costco, around $152 because they were down from 180. I bought some shares of Home Depot because Home Depot has been killing it for the last 8 years or so. And house prices are at an all-time high, so Home Depot is not overpriced. It's about 22 times earnings. They pay a good dividend. They are slightly more expensive than the average stock in the stock market, but because of the good housing market, and I think Home Depot is in kind of a long-term upward trend. The sector is kind of a winner, selling stuff to people that want to fix up their houses, selling stuff to contractors. I think Home Depot is a winner. I forget what I paid, about $152 for the shares. Whatever it is, I paid whatever it's going for. I didn't get a great deal on it. I just think it's a long-term winner. I also bought a couple of shares of Foot Locker. Foot Locker dropped down to about $48, and this just seems like a deal to me. Over the last 5 years, they have been growing revenues, earnings, and dividends, but the problem is they're having some issues with Nike, where Nike is going to start selling some stuff on Amazon. People are worried that lots of Foot Locker stores are in malls, and mall traffic is a little bit down. So people are a little bit worried about that, but I think Foot Locker at $48 a share is way too cheap to ignore. I think this should be a $60 stock. I probably would not own this company if it was $60 or $70 a share, but at $48, I think it's too cheap to ignore. They pay a dividend, they earn money, they are not going out of business, they are not Macy's, where their just sales are going down and down. So, they're not in the Macy's category, so there's no reason they should be trading for 48. So I'm taking a chance on buying a company that I would not otherwise invest in, but they have made an incredible amount of money over the last 2 quarters. Excuse me. And they're doing very well. Anyway, that's all for now. Thank you for subscribing. Thank you for sharing. I appreciate you watching the videos, and check out some of my previous videos if you're interested in those topics. I'm trying to make a few more videos about particular stocks. So thanks so much. Bye.